This video is a review of Astellas Pharma's fiscal year 2024 full-year financial results, period from April 2024 to March 2025. Astellas Pharma Inc. is a major global pharmaceutical company, formed in 2005 from the merger of Fujisawa Pharmaceutical and Yamanouchi Pharmaceutical. Astellas operates in more than 70 countries and invests heavily in research and development to expand its global healthcare impact. Fiscal year 2024 Financial Results Overview. In fiscal year 2024, Astellas achieved its highest ever revenue and core operating profit since the company was founded. Revenue rose sharply by 19% compared to the previous year, mainly driven by strong sales of its strategic brands, which together grew by about 180 billion yen to surpass 340 billion yen. In terms of expenses, Astellas successfully met its cost-cutting goal of approximately 40 billion yen. As a result, SG&A, selling, general, and administrative expense ratio, improved by 3.1 percentage points. Overall, core operating profit jumped by 42% year-over-year, supported by both strong brand sales and continued cost-saving measures, leading to a core operating profit margin increase of 3.3 percentage points, reaching 20.5%. FY2024 Financial Results. In fiscal year 2024, Astellas' revenue rose by 19.2% year-over-year to 1,912.3 billion yen, and core operating profit grew by 41.7% to 392.4 billion yen, with both figures exceeding the company's full-year forecast. Foreign exchange effects added 68.1 billion yen to revenue and 15.1 billion yen to core operating profit. Although some additional expenses were recorded, the overall operating profit reached 41 billion yen, up by 60.8% year-over-year, while net profit surged by 197.7% to 50.7 billion yen. FY2024 results were better than the forecasted increase in revenue and profit. Although profits have improved significantly compared to last year, it is still substantially lower compared to before fiscal year 2022. Fiscal year 2024 Financial Results of Main Products. In fiscal year 2024, sales of Astellas' strategic brands and new growth drivers more than doubled to nearly 340 billion yen, increasing by about 180 billion yen, or approximately 110% year-over-year, significantly boosting both revenue and profits due to their high profitability. Astellas' strategic brands include Padcev, Izervay, Veozaic, Veloy, and Zospada. Padcev's global sales nearly doubled to 164.1 billion yen, supported by strong launches and wider approvals for first-line metastatic urothelial cancer. Izervay, launched about 1.5 years ago in the US, expanded quickly to 58.3 billion yen in sales, despite a temporary slowdown, and is recovering after a label update approval. Veoza grew to 33.8 billion yen, driven by launches in 24 countries, while Veloy, starting from Japan, reached 12.2 billion yen, helped by faster-than-expected testing adoption. Zospada's global sales rose to 68 billion yen, up 23% year-over-year, maintaining strong market share in its indication. Meanwhile, Xtandi, another key product, saw its global sales climb to 912.3 billion yen, growing 22% year-over-year and performing in line with forecasts, despite minor U.S. Medicare changes. FY2025 Outlook Overview. Astellas expects its strategic brands to maintain strong growth momentum from fiscal year 2024, continuing to drive revenue and profit increases with additional support from new study results aimed at extending product life cycles. In fiscal year 2025, revenue is forecasted to rise, mainly from expanding sales of strategic brands with an expected underlying growth of 7% after adjusting for foreign exchange impacts. SG&A expenses are projected to improve by 1 percentage point, thanks to ongoing cost optimization efforts. Research and development investment will increase, focusing on projects that have achieved proof of concept, and core operating profit is expected to grow by double digits at 11% excluding forex effects. For shareholders, Astellas plans to raise its dividend by 4 yen to 78 yen per share, continuing its pattern of dividend growth in line with anticipated future profits. For fiscal year 2025, both net profit and EPS, earnings per share, are expected to improve significantly. While dividends have been continuously increasing, concern is that the dividend payout ratio exceeds 100%, meaning the company is paying out more in dividends than its annual profit. Main brands for fiscal year 2025. Astellas expects strong growth in its strategic brands for fiscal year 2025, forecasting total sales of 470 billion yen, up 40% year-over-year, or nearly 500 billion yen when excluding foreign exchange impacts, representing 50% underlying growth. The main growth drivers are iSurvey, Padcev, and Veloy. Xtandi sales are expected to decline by 5% to 868 billion yen due to changes in the U.S. Medicare Part D program, though strong performance outside the U.S. is expected to largely offset the domestic impact, keeping global sales stable on an underlying basis. Pipeline of Astellas. This is the biggest concern, but Astellas is currently heavily dependent on its few strategic brands. While they are performing well now, the company's pipeline for brand new, major new products over the next few years looks relatively thin. This means Astellas could face a gap period after the peak of current products and before new big products are ready, unless some of their early R&D bets succeed faster than expected. Additionally, Astellas blockbuster Xtandi's primary patents are set to expire in the U.S. in 2027 and in Japan in 2028, after which generic competition is expected to impact sales. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 1,435 yen as of April 28th, and the US dollar stock price is $10.06 as of April 28th. Current PBR is 1.70. PER is 19.8. Dividend yield is 5.44%. Compared to the last few years, all PBR, PER, and dividend yield show that stock price is relatively lower. The stock price is currently at a low level, but this decline is due to a deterioration in business performance compared to a few years ago. Although profit is expected to increase in fiscal year 2025, there are concerns about whether the company can continue to achieve profit growth. Conclusion. For fiscal year 2024 and the current fiscal year 2025, sales of existing pharmaceutical products are expected to exceed earlier forecasts, resulting in continued revenue and profit growth. However, since the development and approval of new drugs are not expected to begin immediately, there are concerns about the company's long-term performance. In addition, a decline in profits is anticipated due to the upcoming patent expiration of Xtandi. To ensure long-term business improvement, accelerating the development of new drugs appears to be a critical priority for Astellas Pharma.